Hey everyone, Caleb and Phil here with Jordan Apartment Guys, here to give you a monthly market update on the Bakersfield multifamily real estate. We've got the Trend Vision reports that just came out, so we're here to give you some fresh data on what we're actually seeing in the market with the inventory, with the demand, what's going on. Just basically starting right off the bat, we're basically seeing very similar activity as this time last year, if not actually even more activity now, which is kind of bizarre. We have the same amount of solds that we just had in September as we had in September of last year. We have more pendings. We've got 30 pendings for September of this month and of September of this year, and only 21 pendings September last year. Active inventory, we actually had 63 active listings last September. We only have 55. So we actually have less inventory and more demand this year than last year, which is crazy.
Totally surprising. I mean, the numbers that are really impressive to me is, pendings are trending up in the last 2 months at the same time that supposedly interest rates are going up. And inventory number of properties, multifamily properties for sale this month is lower than it was last October or September.
Yeah.
That was a hot market. That was a super hot market, and supposedly we're in a slowing market, but the numbers just don't show that.
Yeah, pendings for September and August were both ahead of last year's August and September. So, and again, we're talking like smaller numbers, but again, we're not talking about on the residential side, we're talking about 800 active listings on the market. We're talking 55 active listings for the multifamily market. So we're talking smaller numbers. So the percentages go up like crazy if you put it in that perspective. 30 pendings this month as opposed to 21. That's like, what is that? 30% increase or more, So, of an increase year over year. Our inventory is down again about 10-15% from this time last year. So, the numbers and active listings coming on the market, we're still seeing pretty similar numbers that we were seeing last year, pretty consistent.
Yeah. I mean, you would think, this is a slowing market. Everybody's rushing to put the property on the market because they don't want to miss the time. But it's not the case. It's like we have, fewer number of sellers. Let's see, looking at, August and September, it's, right about the same, actually. Number of properties going on the market.
Yeah, 38 in August, 38 in August, September 28 last year, 35. So a little bit more on this year of the last month for active listings. But it just ebbs and flows in multifamily real estate. It's just, the months go up and down and you just kind of have these natural progressions. But it's not like massive fluctuations with the market like with interest rates. And the media, I think, picks up a lot on the residential hype. That's going to squeeze out more residential buyers, but investors kind of just do what they're going to do on their own schedule, and it's not like they're affected as much by the, behaviors of everyone else.
If you just look at the real estate news media, you're like, oh, real estate's tanking, but it doesn't seem to be tanking. I mean, we're looking at a Trend Vision report, and it tells us, it analyzed the numbers, and tells us, is this a seller's market? Is this a buyer's market? Is this a even-based market? And the headline here is September is a seller's market. Crazy.
Yeah, we're still in a seller's market. I mean, it's weird, and that matches up even with personal experience of talking to buyers and sellers that we talk to all the time. Buyers are being sometimes a little bit more careful. They just want to make sure that their numbers are good going in. But that's the thing, investors were always pretty careful about the numbers going into a property anyway. On the residential side, people maybe buy a house once every, couple decades sometimes. And so, maybe they're not paying attention as much, but investors, they kind of know their numbers going in anyway. If they find a good deal, it's a good deal, they're going to buy it. That's kind of what we're seeing.
Let's look at, our recent market activity. I would say our last 4 listings, all cash buyers for one thing, that's interesting. And the average market time has been, literally 5 to 15 days market time.
Yeah.
And literally every single one of them was full price or close to it.
Yeah.
So.
Yeah, it's been, very strong and we've had a good mix of the types of buyers too, as far as like large cash buyers that own a ton of property, people that only own a couple of different properties, still hunting. I'm still talking to people today that are just still getting financing too, and they're still hunting and they want a good deal and they know their numbers and they know as soon as a property comes in that's reasonable in the market, they're gonna strike on it. So yeah, I mean, and then you mentioned days on market, cash deals and stuff like that maybe go off a little bit faster, but we're looking at even average days on market. September of this year, 31 average days on market, and then as opposed to last year, 32. So we're actually a day ahead. Yeah. Same thing in August. We had 25 days, average days on market of August of this year, 26 of last year. So we're still ahead of last year. In July, we're crushing July. July of last year was 47 days on market. July of this year, 28 days on market. So we're actually seeing like faster sales. We're seeing somewhat of the same, if not a little bit less inventory, and even more demand than we saw last year. So it's bizarre.
What I think people have to realize is when you look at, something new on CNN or, whatever news media, generally it's national news, and they're looking at a whole lot of different areas. I mean, we're here, California, Central Valley of California, versus, something going on in Louisiana, Ohio. There's all sorts of issues going on over there that we don't face here. Mm-hmm. So it really can scare, the buyers if that's all they read. But we're seeing that just the information about California is totally unique, mm-hmm. And especially our local Central Valley area.
Yeah, I mean, and that's the thing. Bakersfield is even different than part of the rest of California, Los Angeles, San Francisco, and all these other places I hear buyers talk about all the time. You think that if interest rates get up into the 8.5% range, then it's going to affect when you buy a $400,000 or $500,000 property. But that hurts way more to pay 8.5% interest on a $2 million property in Los Angeles. Like it's gonna hurt them a lot. And so it's like, okay, well, I could still buy a reasonable property in a strong and growing environment of Bakersfield, as opposed to it's squeezing out even more people out of those other markets and bringing them here. I mean, a lot of investors come from out of area from here, just because they see the potential.
As a matter of fact, I mean, if affordability becomes an issue, well, then that creates more of a demand for an area like Bakersfield and the rest of the mm-hmm. Central Valley, because obviously our prices are, way more affordable here. Yeah,
you can sell your $1 million house in Los Angeles and move to Bakersfield and buy the same exact thing for $400,000 or $500,000. Like, it's kind of bizarre. Same thing with rent too. I mean, tenants even, they're paying exorbitant amounts of rent in Los Angeles, and they're like, I could just make an hour-long commute and I can pay a third of what I'm paying in rent.
I got to tell you a story. I just looked at, I previewed a couple fourplexes in Santa Barbara like about 3 weeks ago. It was about a month ago. And these fourplexes, they were both like in the 2.2 million price tag.
Wow.
And there's one sold, the other still for sale. But I thought, well, surely the one that sold is, has the better gross rent multiplier. But I looked, and it was really the other way around. So the property that sold was a fourplex, sold for 2.175, and it had $7,400 a month in actual rents. Wow. So I calculated that's a 23.5 gross rent multiplier. And it just sold and closed, and just a few days ago.
Yeah.
So we're gross rent multipliers of 11, 12, 13. It's higher than investors want to pay, but hey,
look at the alternative. Yeah, and that's exactly right. I was just talking to another buyer this morning, and we were talking about this of, so some people look at it, well, I can pay a higher sale price in Los Angeles, but I'm going to get higher rents. But proportionally, those don't go up the same amount. Like you're not going to go from a $500,000 fourplex and then quadruple that in LA and you're buying a $2 million fourplex. The odds of those rents actually being quadruple, like they're probably higher, but they might not match it all the way up. You're probably better off to buy 4 fourplexes in Bakersfield because you're going to get more bang for your buck.
Yeah, so for sure. So in that Santa Barbara example, the rents are twice as high as Bakersfield, but the sale price was 4 times as high.
Yeah.
So for every dollar you invested on that fourplex over there, you're getting twice the amount of rent here on a Bakersfield fourplex than
Yeah.
that Santa Barbara fourplex.
Yeah, and I mean, a lot of people buy on those areas for the appreciation that comes with it, right? They're kind of doing it as a longer term play. They want a property in a beach town because they're hoping maybe in a couple of years that $2 million property is worth $4 million. But Bakersfield's seeing incredible appreciation too. I mean, a lot of it's driven by the rents and the income of the property. So that goes up. And so proportionally, again, it all comes down to proportionally, you're still seeing excellent appreciation here in Bakersfield. You're still seeing excellent, cash flow compared to a lot of these other places. So yeah, Bakersfield's great. We talked about seller's market a little bit earlier. Seller's market being 0 to 3 months of inventory on the market, neutral market kind of like 3 to 6 months, and then like a buyer's market 6 months or more.
Right. Yeah.
I mean, we just got this report. We have 2.6 months of inventory from September, and last September it was 3 months. So we actually have less months of inventory now by about 20%. So I mean, it fluctuates.
Yeah,
again.
look at
but
October last year. It was 4.2 months of inventory.
Yeah.
October last year. So we're poised to have a dramatically less months of inventory.
Yeah.
For the month of October. At
Yeah.
the rate we're going.
Yeah. So, it ebbs and flows. Obviously, October maybe a little bit higher than we're normally used to seeing, 4.2, but still, yeah, we're still way ahead compared to last year. So we'll see, but it looks like the market is still going really strong. Looks like interest rates, from just conversations that we're having with people are being more cautious and they're aware of it, but it's not really freezing people. Like just looking at the actual statistics for Bakersfield real estate, this is what's actually happening. Like you can hear all the headlines you want, but what is people, obviously their actions speak louder than words, and people's actions are they're still buying a lot of real estate in Bakersfield. The prices are still holding well. I would anticipate as interest rates, if they continue to keep going up, eventually that's got to impact prices, at some level. But I think what we're seeing is it's a little bit different than on the residential side because multifamily investors still believe in Bakersfield.
Yeah.
Like they believe, okay, we might have to squeeze it a little bit tighter for the next few months or years with the interest rate. But we believe that the rents are going to continue to keep going up. And in 5 to 10 years, I'll be so glad that I actually bought that property in Bakersfield, right? And that's the thing. It pinches a little bit more now. But if you can make a property work that's not negative and isn't like bleeding you dry, in 5 to 10 years, you're going to be making a killing off of it.
Yeah, so I would say if you, look at it from the point of view of a seller, if you were actually thinking to sell and you're wondering, is this a bad time to sell? I would say, no, look at the statistics. The statistics say that the market is very active and hot, and there's buyers for the properties at the right price. But at the same time for a buyer, if you're buying for short term, 1 year, 2 years, that's maybe it's not that good of an idea. But you're not. Most investors, they're not buying for that short term. They're buying for 5, 10, 15 years, 20 years, and absolutely, it's good timing to pick up property right now. Rents are gone up. Oh yeah, there's a statistic we saw that the third quarter 2022 rents were higher than second quarter. They went up, and vacancy factor jumped up a bit, but it's still under 2%.
Yeah.
Under 2% vacancy factor for Bakersfield. Yeah.
Yeah, still very strong rental market, still very strong buying and selling market. People are still finding good deals, and there's still good deals to be had. So, that's what we're seeing right now. And, we'll maybe do another update again next month and see what happens in a month from now, see if there's any changes. But everything still looks really solid to me.
Yeah.
So, awesome. Right. Yeah, if you guys, stay tuned to subscribe to the YouTube channel. We'll do updates like this every single month, and we have videos being uploaded to the channel all the time. So if you, with different tips and tricks and stuff, if you're looking to do anything with your property or maybe jump into the real estate market for your first property, definitely give us a call, give us a text, and visit our website.
Absolutely subscribe to Jordan Apartment Guys. If you will take a look at our Jordan Apartment Guys YouTube site, you will see so much information, resources.
Yeah, and tons more coming too. So.
Awesome.
All right, see you guys next time.